Brilliant. So right now we have that few minutes. We have up to now around 10, 13 participants. Thanks for people that have joined right now. Thanks very much for your punctuality. I see familiar names. It's great to see you guys. We're going to wait around 5 minutes, so we leave a little bit of room to a little bit of newcomers that we have. So I would like to appreciate your patience in this, but more or less in 3-4 minutes we are going to start. So no worries. No worries. Just a little bit in the meantime, as we're speaking, we're waiting for the rest of the attendees. It is 29. Just a little bit of housekeeping. We're going to have the presentations for around 45 minutes to 60 minutes approximately. If you have any questions, anything that you want to ask us, please use your Q&A button that you're going to see to submit what you have during the course of the presentation, and then either myself or Malcolm will answer them. In case we do not have time, or we're going to see that it's going to basically answer all questions, it's going to take a little bit longer, or it will need a little bit more of time from our end, don't worry, you can contact us on our email, and we'll be back to you without any hurries or any problems. So no worries at all. The idea is that this takes around an hour, so we don't take a lot of time from your side, but you get good and valuable information from our side. So I still see people coming in. So it is 2:30 already. So in a couple of minutes, 2 or 3, 4 minutes, we're going to start. Today in this webinar, we're going to be speaking about tax consideration for private clients in Malta, where CSP Group and Malta Sotheby's we are based. Today you're not going to be hearing myself only. We are joined by my colleague Malcolm, who you can see on the screen as well. How are you doing, Malcolm? All good?
All good. Thank you.
Are you in the office, by the way?
Yes, at the office.
Good.
Boardroom.
Good. That's good. I mean, as everyone knows, I mean, COVID-19 has made us to work remotely. So right now Malcolm is in the office. We are keeping obviously safety measures, social distancing, and little by little at CSP Group with our new normality that we are getting soon. We're going to see that we have a few good news from the Maltese government. From the 1st of July, certain countries are going to be able to fly in Malta, and then 15th of July, we're going to have the airport is going to be open to all destinations. So very good news, very good news. We're going to see a little bit of that during the course of the webinar. Hi, Mr. Mark, how are you doing? Yes, I just see you. If you want to have, Mark, if you have any questions during the course of the webinar, just please put it there. I will answer them straight away after we finish the webinar, or I will contact you directly on the email. We can schedule a Zoom call. No worries at all. We'll answer this basically at the end of the webinar, Mark. No worries at all. Thanks very much. Okay, we 32 past, a couple of minutes. We have people still coming into the room. So if you don't mind, just be a little bit. We have just basically a couple more minutes. We are going to start. By the way, after the first, second slide that I'm going to present you, we're going to be doing a poll. I would like to know, just will take a couple of seconds from your end. I would just basically appreciate if you can answer it, just basically to see and to understand from where our audience is coming today. So it will be great if you can answer it, and then we'll move forward. So no worries. People are still coming in the room. And in a few seconds, we are going to start our webinar. As said, if you have any questions during the webinar, please submit it as Mark did a little bit earlier, and I will answer them, or Malcolm will answer them over the course of the webinar. At the end of it, to be more precise, we're going to contact you directly on the email that you have provided to arrange a call if you would like to. So I mean, it's 34 past, we're reaching to 35 past. People are starting entering in the room, and in the meantime, we're going to start our webinar. So I would like to say good morning, Americas, good afternoon, Europe and the UK, and good evening, China and Southeast Asia. As you already know, my name is Andres Gutierrez, and it is my pleasure to host this second edition of the CSP Group webinar series. Today, we'll be speaking about Malta taxation for private clients with my colleague Malcolm. The webinar will take approximately 45 to 60 minutes. After, we'll be able to answer your questions, as I said before. Alternatively, you can always reach us on email or to our phone numbers. Today, we're going to be giving an introduction as well about our company, to the ones that are not familiar with us. But we're going to be speaking about Malta tax residence programs in the residence in Malta for private clients, the tax considerations, the non-dom regimes, and so on. We're going to touch base with a little bit of corporate taxation as well, just a little bit, not much, so we won't have enough time to cover it all. And finally, how we can help you. Now, if you don't mind, if you can just basically go into launch polling, if you can answer, basically take 5 to 10 seconds to answer from where you are watching, would really appreciate it. Okay, see that quite a few answers are coming in. Still coming in a few. And we're going to end up there. So we're going to share the results, and as you can see, most of us, 79%, are coming from Europe, but also we have America and the Caribbean. Second, it is Asia, 12% from Asia. So thanks very much for this, everyone. And right now, moving forward with our presentation. Please stay tuned to our next event. Next week, we're going to be speaking about why invest in Malta with our colleagues from Malta, and global mobility in a post-pandemic world with Barter Wells. We're going to be touching base with the Irish residence program in St. Lucia City. After that, with our colleagues from Mamicorp, we're going to be talking about global solution for private clients in terms of structuring and immigration planning. And finally, we're going to have a great panel with Range, Pace Law, and Paragon Partners, we're going to speak about Grenada citizenship and the E2 visa. Now, just a brief introduction of who we are. CSP Group since over 30 years in the financial service industry, and we are regulated by the Malta Gaming Authority, Malta Financial Service Authority, the IAP agency, MRVP agency, and the Commissioner for Revenue, amongst others. Within our umbrella, the brands of Vacancy Center, which is our recruitment arm, Riches for co-working spaces and substance. We are opening our third Riches Center in July, and finally, Malta Sotheby's International Realty for luxury real estate advisory. This allows us to give a holistic approach to professional services and and it follows a one-stop shop vision that Mr. Tony Summit and Michael Summit, our group CEO, had from inception. Now, the services that we offer, they range from private clients to regulated industries. We serve private clients with investment migration, Malta, real estate, relocation, shipping and yachting, and so on, as well as we're a corporate service provider. We provide company formation services. We have trustee and fiduciary services, as well as we give services on our day-to-day basis from an international corporate portfolio, giving assistance as well on the tax and legal side, related industries, iGaming, blockchain, financial services, and so on. Now, a little bit on our team, myself, which you already know, our group CEO, Michael J. Summit, and Frankel Kakia, which is our managing partner for CSB Legal. Finally, what I would like to present, you already know myself, I would like to present our speakers. Myself, I will be speaking about the investment migration programs for tax residency, and today I'm joined by my dear colleague, Malcolm Ferrante, which is Manager for Business Development. Michael joined CSB in September 2011, starting in accounting services, and he has been responsible for handling a large portfolio of international clients from different sectors. From 2017 onwards, then Malcolm took on the role of tax advisor with the National Tax Unit. And then in 2018, he became the senior manager for business development, assisting clients in the setting up of their companies in Malta and maintaining the ongoing relationships with our existing client portfolio and potential clients, looking into not only the corporate side, but also the tax side. So Malcolm, just to say hi to the audience, how are you doing?
Thank you for the introduction, Andres. All well from my end, and I'm looking forward to starting the webinar, and we'll see how it goes. Look forward to answering any questions at the end, and we'll take it from there.
Brilliant, excellent, Mal, fantastic. So right now, as we said at the beginning, I'm going to give a little bit of a brief about investment migration tax residency. It's not going to take long, and then we're going to go to the private client taxation considerations that Malcolm is to tackle from A to Z. So just basically, what do we do at Citizenship and Residence Planning? We have a wide program portfolio, EU residence citizenship programs, also Caribbean citizenships, and other programs like Montenegro and Ireland, as we're going to see next week. But most importantly, what at the end of the day means citizenship and residence planning? It means basically reasons for economic migration. We enter the panorama with a certain situation that allows us to see and to think, where do I want to start? This is very important to look at it not only from a global mobility perspective, but also from a tax perspective. We are working together hand in hand with Malcolm and Franklin, with various clients that they do not only want to move and basically have a safe harbor, but they also want to improve their tax position and their structure. And they are taking this as an advantage to go out stronger. Investment migration is not only anymore about visa-free and lifestyle, but also about economic migration and business relocation. At the end of the day, we talk about getting to a safe harbor, and that includes a good healthcare system, education, law, abiding population. That is what it makes a safe harbor. Citizenship and resident planning allows financial diversification by investment in different assets, as we have seen, we're going to see, and also the topic of today. It allows us to give to our clients tax efficiency. If planned carefully and preventively, like we are doing with many clients with Malcolm and Franklin, this can help optimization and structuring on a case-by-case basis. It can also say, well, actually, Malta is great, or Malta doesn't suit my possibilities for whichever reason. The most likely thing is that that is not going to happen. But citizenship and residence planning gives these useful possibilities that we're going to see today. Finally, this allows us to, obviously, if we have an efficient tax structuring, this allows us to preserve the wealth of our clients, and this allows to a better and optimized estate planning and inheritance planning. And finally, we talk about lifestyle, which is traveling, which right now we don't have that much, but that will come, like everything. Now, we're here to speak about Malta, or República de Malta, as it is formally known, the gem of the Med, which I like to refer to it. And basically, I would like to give brief country overview. Most of you already know Malta, but I would like to introduce it just very briefly. It has a population of around 500,000 people. It's part of the European Union, the Schengen area, and the Commonwealth. It is strategically located, as we're going to see in the next slide, and 3 languages are spoken: English, Italian, and Maltese. I must say that it is a very welcoming society, a very welcoming culture. It is a fantastic place to be, not only from a place, basically for a location, but also from a way to live, basically, and a way of life. As one of my colleagues from Sotheby's was mentioning in a video, as Malta is a way of life. And I think that the ones we have been there, we are there, we embrace that, and we like it very much. Malta is comprised of Malta and also the sister island of Gozo, which is something beautiful. I have to recommend that if you would like to do a stopover in Malta and spend a few days, you are going to guarantee that you're going to love it. But at the end of the day, where Malta is, Malta is in the center of the Mediterranean. It has a great position because it is 3 hours in a quarter from London, 4 hours Moscow, 7 Dubai, 3 hours from Egypt, 2 hours and something from Spain, from Barcelona, 2 hours and a half from Madrid. It is basically in the middle of the Mediterranean, which is a great location. And why, at the end of the day, Malta is a safe harbor? I mean, Malta is your safe harbor because at the end of the day, from a health perspective, it has a first-class healthcare. According to the World Health Organization, it has one of the top 5 health systems worldwide. It has been one of the less impacted countries by the COVID-19 pandemics. And these are cases from today. I'm talking about today. Malta had 662 cases and 610 recovered cases, with 9 deaths only. Only 12 active cases, which it makes it to be very strong. I mean, the attitude and the actions that the Maltese government has taken during March certainly have given its good fruits. And obviously, I mean, the fact that we are in an island with a small population makes disease control easier. It is 4th in test by millions. And good news, as we were saying at the beginning, from July 1st, Malta is opening the airport to 19 countries like Cyprus, Ireland, Germany, Switzerland, Italy and Spain with certain restrictions, Austria, Sicily and Sardinia, amongst others, and from 15th of July to all other destinations, which is something which is very important for the economy itself and for you to know as well why this is a good and safe harbor. Another thing that makes it a safe harbor is that it has a strong and stable economy. Malta's rating, it is stable. And I'm not saying that, basically. The Moody's and Fitch agencies have given Malta a few weeks ago, around 4 to 6 weeks ago, very high rating, basically A2 from A2 Moody's and Fitch A+, in the middle of the pandemic, which what it shows is the strong economy. Even it may seem, and maybe it is small compared to Germany or to any other countries, it is very strong, especially when you compare it with Spain or Italy, that those jurisdictions are going to shrink approximately around 15%, 18% during this year. During 2018, it had a growth of 6.8%, and in 2019, around 5%. This year was going to be around 4.75% growth, but obviously COVID got in the way. Malta obviously has been in the European Union, would benefit from all the measures taken to overcome the recession, has a very low debt ratio, 40% approximately. Obviously, then being in Malta and being a Maltese citizens, you can access to world education. There is free education for children and free education at a university for Maltese citizens. And obviously, as we said before, it is strategically located. But then at the end of the day, we already know that it's a safe harbor, and here we're talking about tax as well. So what I want to talk right now in the next couple of slides, very short, it is about tax residence programs for private clients. And these referred to 2 programs which are named differently. but they have the same benefits and the same requirements. One is the residence program, which is for EU, Swiss, or EEA nationals, and the global residence program for third country nationals. It is very important to note that these are tax residence programs suited for that high individual client, for those clients that for their lifestyle, they are suitable, they are suitable. So basically, which are the requirements? The Malta TRP or GRP, they require either the purchase or a rental. The purchase can be of 220,000 euros if the property is located in Gozo or south of Malta, or a purchase of a property of 375,000 euros if the property is based in Malta. Anyway, applicants can also rent a property, which makes this to be quite flexible, this program. The monthly rental needs, or the yearly rental needs to be for 8,750 euros if the property is located in Gozo or the south of Malta, or 9,600 per year if the property is located in Malta. There is an application fee, which is a one-time application fee, and which is paid at the submission of the application to the Commissioner for Revenue, for which we are obviously authorized mandatories, of 6,000 euros if the property is located in Malta, or 5,500 euros if it is located worldwide. At the end of the day, these are the investment requirements. You can see that it is pretty much simple, but where this leads, our clients, and where this leads us. This basically leads us to a special tax status. This special tax is 15% on a remittance basis, flat, with a minimum tax of 15,000 euros per year, as we said, on a remittance base only. There is no Malta tax on capital gains, which are realized outside Malta, received in Malta, and obviously the applicants, they will be able to benefit from double taxation treaties to avoid double taxation and so on. This is quite important because this 15% is a flat rate. So if the applicant has his income that wants to write to Malta and wants a flexible program that do not require him a minimum stay in Malta, but on the contrary, he would not have to spend more than 183 days in any other country to be beneficiary of this program, it becomes very, very flexible, because at the end of the day, the client can come to Malta 1, 2, 3 months or even less if he would like to, but normally that is what we will recommend. And as long as he's not resident in any other jurisdiction, he will be able to enjoy this special tax status. Main applicants can include family members. Here we're talking about it is a wider scope than what we can see in the IIP or the MRVP. Dependents are obviously the spouse, but also we can look at a stable relationship, parents and grandparents, siblings, and children under 25, and also domestic staff, which makes quite an interesting fit. Tax status is it is passed through, it is inherited as well. And obviously, I mean, this will give residence to Malta, and for example, for third country nationals is quite interesting because applicants, they will be able to apply for a new residence card. Therefore, they will be able to show proof not only that they are resident in Malta, but to have visa-free access within the Schengen area. So it has quite an interesting facts within it. Another set of benefits of the TRP and GRP program, it is that we can process all the application remotely. There is no need to travel until the approval of the application. The approval is basically issued by the Commissioner for Revenue. We submit the application to the Commissioner for Revenue, they study it, they do their due diligence, they approve the application, and at that point, it is when the applicant needs to travel to the island to take his biometrics, show proof of the investment, have a short interview with the Commissioner for Revenue. So at the end of the day, there is no investment until approval, which, I mean, we could say that there is no capital at risk apart from the fees which are paid to the Commissioner for Revenue and obviously professional fees. The renewal of the residence card is every year, and after the first one, it can be done every 2 years, which makes this a little bit more flexible. Obviously, we can assist you on the processing of the application, and Malcolm and Franklin with our CSP team will assist you on the filling of the tax fillings and give you all the guidance about that. So basically, this is what we can look from investment migration and residence planning, especially the data in terms of tax residency in Malta. And I think that you can see how it can benefit that private client, which has a global reach, has different business interests worldwide, has probably family in 2 or 3 different places, and is very used to travel and spend 2, 3, 4 months in different jurisdictions. And by this way, he can benefit to have a great place to live, to spend time. No need to spend a minimum of time in the island and benefit from incredible tax status within the European Union. So right now, this is all from my end. I'm going to hand it over to my colleague Malcolm, who will be speaking about Malta tax consideration for private clients, which individuals are taxable in Malta, non-dom, and so on. So Malcolm, hand it over to you, and thanks very much.
Thank you, Andres. Hi, everyone. As Andres already introduced myself, I'm Malcolm Ferrante. I work in the tax department, and in September, I've been 9 years with the company. I plan to give you a bit of an overview on the basics of obtaining residency in Malta, not through a tax program, so just through ordinary residence. I will be going into the different tax consequences that one may face once obtaining such status in Malta. Malta assesses its tax jurisdiction on the basis of either source or remittance of income, and this will depend on whether the individual is resident or domiciled in Malta. And we will be going to the different definitions in our next few slides. The term domicile does not actually have a meaning in our income tax law, but instead it is adopted from the British common law, where they define domicile as a physical presence in a country as an inhabitant. So basically, domicile is the place where one is born in a particular country. Everyone has a domicile, so at every single point in time of your life, one person always has a domicile, and at no point can a person have either no domicile or 2 places of domicile. An individual can be resident in 2 countries at the same time, but they can never be domiciled in 2 different countries at the same given time. There are 2 types of domicile. There's a domicile of choice and there's a domicile of origin. When we look at the domicile of origin, as we previously said, this is where the individual is born, it is obtained at birth, and it is always the same as the father's domicile. So, for example, for myself, my father is born in Malta. When I am born, I am already considered to be domiciled in Malta and living in Malta. Therefore, I am resident and domiciled in Malta. At a later stage, this can be changed, and this will be considered to be the domicile by choice. One can change their domicile at any given time once they show a clear intention to indefinitely reside in a new country. This would mean setting up new ties in a particular country and cutting all ties with your previous domicile of origin. Malta does not impose any deemed domicile. Therefore, an individual who decides to become resident in Malta will not be deemed at any point in time to be domiciled in Malta unless that individual opts for such change. There's a process for this and some documents to be filed. This is the process. However, it is important to note that an individual that decides to become resident of Malta will at all times be resident but not domiciled in Malta unless they opt to have this changed to become resident and domiciled in Malta. When it comes to residency, this is maybe a term which is more commonly known, and it is based on having a physical presence in a country along with the intent to reside in that particular country. So when an individual decides to move to Malta, obtains a property in Malta, either through purchase or through rental, they will be deciding that they basically have a physical presence and they have an intention to start residing in Malta, and at that point we can opt to obtain the residency documentation in Malta. Again, at this stage, an individual will be simply ordinary resident but not domiciled in Malta. This is important because the difference between an individual being resident and domiciled or resident but not domiciled will have a different method of taxation when it comes to being an individual of Malta. When one is resident and domiciled, like myself, born and living in Malta, I am a resident and domiciled of Malta, I am taxed on a worldwide basis. So any income which I earn outside of Malta, foreign income sourced in Malta, whether that income is remitted or not, will not make any difference. I am taxed on my income on a worldwide basis. On the other hand, an individual who is going to be resident but not domiciled, and therefore an individual who is born outside of Malta but decides to obtain residency here in Malta, is taxed on a remittance basis, which means that they are taxed either on any income which is sourced in Malta, any capital gains which is sourced in Malta, and on any foreign income which is remitted into Malta. It's important to note that such individuals will not be taxable on any foreign income which is not remitted into Malta, and on any foreign capital gains, even if those capital gains are remitted into Malta, they are not taxable in Malta at any given time. When it comes to the remittance of funds, the Income Tax Act does not provide a definition of what this remittance actually means. However, through common practice and through experience, we have understood that remittance is taken as a definite guarantee that it will take place when there is a transfer of funds from a foreign bank account into a local bank account. So if an individual becomes resident in Malta, opens a Malta bank account and decides to remit foreign income into Malta, that will be a remittance of foreign income and taxable in Malta. The transfer of funds from a foreign bank account to a third-party local bank account will also be considered to be a foreign remittance of income into Malta. And the third option would be the use of a foreign debit card, either at an ATM in Malta to withdraw cash or settling expenses in Malta by the use of a foreign debit card. So going to a restaurant in Malta, paying by your card, buying your groceries either online or at the supermarket, if you're using a foreign card for such purchases, that will also be considered to be foreign income remitted into Malta. On the other hand, as we said, the remittance of capital is not taxable even if remitted to Malta. As an example, we've had clients who, upon obtaining residency in Malta, they had quite a nice cash balance held outside of Malta. Upon obtaining residency, they decided to transfer a sum of funds into their Malta bank account. And since these funds were held prior to obtaining residency, that was considered to be their capital prior to obtaining residency. And upon such transfer of the remittance of capital into Malta, that amount is not taxable. Second example, obviously, would be if an individual owns a property outside of Malta, they decide to sell that property and remit those funds into Malta. The property held abroad is considered to be your capital. Any of those funds remitted into Malta would not be taxable. What's important to mention at this stage is that it is very important that individuals who are resident but not domiciled in Malta will keep a clear distinction between their bank accounts and their funds. One account will be held for the capital account and the other account will be held for income. The reason being is that it is not very easy to always identify whether a transfer being made is either a transfer of income or a transfer of capital, and due to this, the Commissioner for Revenue has decided that upon a transfer to Malta, it is deemed that the first transaction to be transferred into Malta will be deemed to be your income, and any further income will then be considered to be your capital. So it will be important that at all times there is a clear distinction in order not to mix up your sort of tax-free capital account to make it taxable in Malta. The third source of income to be taxable in Malta is, as we said, the Malta-sourced income. And this would be, an example of Malta-sourced income would be a salary being generated from Malta, dividends being earned from companies which you own in Malta, or rental income from immovable property, which one would have in Malta. When it comes to the tax rates for the resident, non-domiciled, or resident and domiciled individuals, these are the same. So basically, we are taxed at progressive tax rates in Malta, which we'll be looking at in very shortly. The first bracket will be 0%, and it goes up to 35%, but I'll explain that in a bit more detail at a later stage. What I wanted to mention over here is that although the resident but not domiciled program, the ordinary residency program, is not a tax program, there is still a minimum tax payable in Malta every year of €5,000. And this was introduced back in 2018, so it is still relatively new. And basically, the Commission for Revenue has decided and has passed a law that for the ordinary residents, there's a minimum tax of €5,000 payable per year for as long as the individual has a global income of more than €35,000 per year. The minimum tax is payable even if that foreign income is not remitted into Malta. And this had, at the time, caused a bit of debate. Was it a good move? Was it a bad move? And in my opinion, it was a necessary move to ease a bit of the pressure from European countries on Malta, whereby basically we had quite a few instances where, unfortunately, there are individuals who take advantage of the program. They move to Malta, they obtain residency in Malta, and they remit zero funds into Malta, which means that any income they earned abroad was not taxable in their given country. They remitted no money into Malta, which means that they had no tax payable here, and they were basically paying tax nowhere. This obviously raised a few issues. The bigger countries putting a bit of pressure on Malta to sort of change this system, and to compromise, Malta has come up with a minimum tax of €5,000, which results into a remittance of income of approximately €31,000 to Malta. So I think it makes sense. 30,000 is quite a reasonable amount for one to live in Malta comfortably. So I think that was quite a fair move. We are looking now at the tax rates in Malta. If we go on to the next slide. Over here, you would see that there are the different progressive tax rates. You have the single rates, you have the married rates, and you have the parent rates. Every individual is free to choose the most beneficial rate for themselves each year, and you can switch between one year and the other. So this year you can tax yourself at the single rates. Next year, if, for example, your wife, your husband, your partner decide to stop working, and it makes more sense for you to be taxed at the married rate, then you can do so also. So it's quite a flexible program. It's a self-assessment, so each individual will need to file a tax return each year, advise at which rates they are taxing themselves, and the calculations will also be submitted on a yearly basis. Just for your information, the deadline for the tax returns in Malta is always 6 months after year end. So a calendar year is taken to be January to December, and the 30th June of each year, a tax return will need to be filed. For this particular year, for 2020, we have had a delay. So for 2020, due to the COVID-19, the deadline has been shifted to 31st July instead of 30th June, but otherwise nothing else has changed. Just to give you a bit of an example as to how the calculations are made, I'm taking a figure of an income being remitted into Malta of €45,000, just as an example. And if I have to take the single rate, the 45,000 would fall between the brackets of between €19,501 and 60,000. Therefore, the 45,000 will be taxed at 25%, as we're seeing there, which would amount to €11,250. And then you would just have to subtract the €2,725 that is in the final column under the subtract column. And that would result in a tax of €8,525. What's important to maybe mention at this time is that the minimum tax of €5,000 is not in addition to your tax on your remitted income. It is simply a minimum tax. Therefore, if you have, for example, remitted €20,000 to Malta, and your tax according to these tax rates will be €2,000, that would need to be topped up by a further 3,000 to pay the minimum tax of 5,000 euros payable in Malta. Some other general comments I'd like to make you aware of, which are maybe quite important for some of you, is that Malta does not levy any tax on gifts or wealth or donations in Malta. And there are also worth mentioning that we also have obviously capital gains tax derived on the transfer of certain capital assets, such as property, securities, intellectual property, the usual sort of capital assets that may result in a taxation in Malta. These also obviously apply to us. When it comes to immovable property in Malta, the tax system is basically another tax system on its own. There is a final withholding tax system. There are different rates. It can go from 3% to 5% up to 15%, depending on various conditions that are met and on whether the property is held either for residential investment. So that is a different subject on its own, but of course there is immovable tax. There's tax on immovable property if the property is situated in Malta. I wanted to finish off with a general overview of the corporate taxation and how this could be linked both to individuals who decide to obtain residency in Malta, but also to those who are non-resident in Malta but may be interested in setting up some sort of structure in Malta. It is worth mentioning that there is no longer what one might consider to be a one structure fits all. In the past, it used to be maybe a bit more flexible, a bit easier to set up, since a company used to be taxable where the company is set up, where it is incorporated. One would have an address, a registered address, set up the company, and that company will always be taxable where it is set up. So basically in Malta. That has changed over the years. The tax systems have gotten stricter. Malta falls within the EU, so we have to follow the anti-tax avoidance directives that are issued by the EU. And we have also formed part of the BEPS project and the base erosion profit shifting rules. So it is not as straightforward as what it might have been 6, 7, 8 years ago. But it is still very beneficial. It could still be very beneficial if it is done properly. Just to give you an overview, a Malta company is taxable at 35% in Malta. So some of you might have heard that Malta has a tax rate of 5%. That is wrong. Just to clarify, Malta has a tax rate, an effective tax rate of 35% on any trading profits. The remaining profits, the remaining 65%, will need to be distributed as a dividend to the shareholder in order for the shareholder to become applicable to what we know as the Malta tax refund system. So basically a Malta trading company will pay 35% tax on profits generated. The remaining 65% will be distributed as a dividend to the shareholder, and at that point the shareholder becomes applicable for a 6/7 tax refund on Malta tax paid if the profits are trading profits, or a tax refund of 5/7 on Malta tax paid if the income is generated through passive income or royalties. And this will then result in a net effective tax rate of 5% if it is trading income, or 10% if it is passive income or royalties in Malta. In order for this to be sufficient, as I mentioned, the structures are seen on a case-by-case basis. There will need to be a level of substance in Malta, since the new tax directives have shifted the tax liability, the taxing country, from being the country where the company is incorporated. But now this has been shifted to where the management and control of this company is located. And therefore, it is now very important that when structuring a company, one considers the substance of the company. Where are the local directors? Where are the decisions being carried out from? They have an office, they have employees, and these are all taken into consideration. Of course, each company is different, depending on the size, the structure, the turnover. The level of substance will be different on a case-by-case basis, and also the amount, the level of substance that is needed from day one may be different. For obviously the smaller companies that are just starting up, and getting a foot in Europe or setting up a company in Malta, they may decide to start off with a local director and stop there for the time being. And then once turnover starts to increase, they will want to increase their substance, look to get an office, look to get an employee, and start building up their company from the bottom. Obviously, for a global, larger company setting up in Malta, in order to make use of the tax refund system, they will need to have a level of substance created in Malta to ensure that the management and control is being carried out from Malta. Otherwise, you will have the tax jurisdictions of your country knocking on your door, querying why you are paying tax in Malta when all the works and all the management and control is being carried out from that particular country. What's worth mentioning is that the tax system, the tax refund system, is applicable both to non-residents who want to own a company in Malta and also to individuals who become resident but not domiciled in Malta. When you are resident but not domiciled in Malta, the tax structure will be slightly different, because there will need to be a foreign holding company set up, and it will be the foreign holding company that will be the one receiving the two streams of income, one being the dividend and one being the tax refund. Otherwise, it works exactly the same, where you have the Malta company pays 35% tax, pays a dividend up to the foreign holding company, and then the holding company will be the one receiving the refund and ending up with 95% of the profits, and then seeing what to do with them. They can either reinvest into the trading company, reinvest into other investments, stock, assets, property, or pay a dividend up to the shareholder. Any payments made from a Malta company up to the shareholders, Malta does not levy any withholding tax either. But of course, the individuals will then need to see how they will be taxable in their country of residence when receiving the tax refund and the dividend payments. I think from my end, I have tried to keep it as basic as possible to make sure that it is understandable by everyone. I understand that you might have some queries. We'll be happy to answer the Q&A. If we don't manage to answer everyone, we'll handle any emails, calls. Andres will be sharing our contact details, and I will leave it up to Andres to conclude. I hope everything was clear, and I look forward to hearing from you all. Thank you.
Thank you, Malcolm. I think that was great. I mean, at the end of the day, for the general audience, what we do with the clients, with our citizenship and residence planning services and our legal and tax teams, is we look at the structure of the client, what the client wants, where the client wants to go, and we advise. And we normally do that pre-immigration assessment from a taxation point of view, because it is not the same for a French national, it is not the same for a Spanish national from a UK before Brexit, obviously, to move into Malta, and that will affect his situation. Third country national, the same, but if he wants to be resident, perhaps he would like to look into the GRP because he doesn't enjoy the freedom of movement. Perhaps the client enjoys freedom of movement, but because his lifestyle and because the source of his incomes, it makes sense to take up the TRP. So these are, as basically Malcolm was saying, there is a general overview. We are going to be more than happy to answer your questions in just 2 seconds, and basically then you can contact us on our emails without any problem. And finally, that gives us to me to say how we can help you. At the end of the day, we have an unbiased, customer-centric and personalized advice. We have a holistic approach to private client services, basically from A to Z, even if you need a system with rentals, purchase of properties, investments, whatever it is, we're going to be able to do it through Malta Sotheby's International Realty, the same as if you are looking into wealth structuring in the island. We take this hand in hand. And also we have qualified lawyers, an experienced team of professionals. We have been 30 years in the island. And as you saw before, we are regulated by almost all, if not all, the agencies in Malta. So right now, what I'm going to do, I'm going to leave our contact details. These are our emails and phone numbers. I'm going to go through the Q&A. Basically, we have a few. I'm going to go, Malcolm, basically, as they arrive, first comes, first serve, and then I will be passing them on to you. So earlier today, we had a question from Mark. Thanks very much, Mark. Asking if we do see a change in the rates from the government during the COVID-19. I believe that here you are referring to the investment migration programs. Eventually, as you know, the IAP is going to go through changes. It is reaching its cap, and a revised program will be launched, so basically the structure will be transmitted to us, notified in the next few weeks. I don't foresee that will go down. I basically think that at least it will stay the same, or will be more exclusive, let's put it that way. It will require higher investment. In terms of the MRVP, I don't foresee any changes. The same with the TRP and GRP. Now we have another question from Evgeny Ivanov. Privyet. I don't speak Russian, by the way, but I'd like to say a few words. I am an EU citizen. My wife is Russian, now living in Moscow. If we decide to join the tax residence program, which program should we join? Resident card is a travel document within EU or not? So as you are an EU citizen, you could apply for the TRP with your wife as a dependent. At the end of the day, you are going to have the main source of income. And then that resident card basically will allow you and dependents to live in Malta. Will apply for a residence card based on the DRP, and that residence card will allow you to live in Malta and to have visa-free access within the Schengen area. I will contact you then separately. So thanks very much. Anonymous attendee, is a 15% tax only on offshore income brought to Malta? So as we were saying, as Malcolm was explaining later, that 15 tax is on a remittance basis. So all the income, and as you saw later with Malcolm, with the difference between income and capital, that income that is remitted to Malta, it is taxed on a flat 15% with 15,000 minimum tax. If anything, please contact me on my email. That is not a problem. Then we have the next one. Is there any minimum tax? Malcolm, I think that this refers most to you, if you want to tackle it.
Sure.
It's basically asking if there is any minimum tax.
Yes, no. As discussed, if you are resident but not domiciled in Malta, there is a minimum tax of 5,000 euros for as long as the individual has a global income of greater than 35,000 euros. As we discussed earlier on, the minimum tax is applicable even if the foreign income is not remitted into Malta. So for as long as an individual earns more than 35,000 euros in a particular year, they would be subject to a minimum tax of 5,000 euros in Malta. Thank you.
Brilliant. We have the next one, Kirongo. Need to clarify on the foreign income received in Malta. Is this considered to be non-taxable in Malta if tax has already been assessed on foreign income? So I understand that the question here, Malcolm, it is foreign income that has been taxed on source, not where it's received. And then what if the foreign income has not been assessed for tax, obviously paid on foreign source? How this would affect how Malta regards the foreign income for tax purposes?
Okay, so in both cases, any foreign income which is remitted into Malta will be taxed in Malta at the progressive tax rates. However, Malta does allow for a relief of double taxation on any tax that has already been set on foreign income. And this will be done through your tax computation, which we can help you when submitting your tax return in Malta. And obviously, we will need to provide evidence of the foreign tax paid on the income that has been remitted into Malta. But of course, Malta does allow a relief for double taxation. In the case where the foreign income has not been assessed for tax from its foreign source, that income, if remitted into Malta, will be taxable at the progressive tax rates that we had seen previously. Any foreign income which is not remitted into Malta does not need to be reported in Malta and will not be assessed any further from a Malta perspective. I hope that answers your question.
Brilliant. So next one, Malcolm, as well, will be for you. What is the capital gains tax rate for gains earned in Malta?
Okay, the capital gain in Malta is normally 35% on the gain. However, once again, this is looked into on a case-by-case basis because depending on the type of asset that we are looking at, whether it is a security or a immovable property, the tax rate could be different. But in general, as a general rule, we will say that the capital gains tax rate in Malta is 35% on the gain. Thank you.
I have a question on the chat, basically, which says, what is the resident situation for a UK national post-Brexit? So, as you know, I mean, Brexit is Brexit and will happen the 31st of December or 31st of December at the end of the year. So after that, UK remains a third country for in regards to the EU. So they do not apply, or the freedom of movement, it is not applied. So if you want to move to Malta, you will need to apply for an investment migration program, for a work permit, or anything like that. Thanks for that. We have quite a few questions. We're going to try to answer them all. Let's see if it gives us some room. We still have around 10 minutes approximately. This one for you, Malcolm, as well. Can the dividend be lent back to the company immediately, or must it be actually paid out of the company to the shareholder and then paid back to the tax refund?
Okay. So in order for the tax refund to be applicable, there must be a deemed dividend which is declared and paid. When they paid, it must be declared through a dividend warrant that the shareholder is due a dividend from the Malta company. Whether the dividend is actually paid in cash or whether it remains a balance sheet item, therefore a liability from the company owed to the shareholder, that is also possible. So to answer your question in a nutshell, the dividend can be lent back straight away to the company to basically reinvested in your trading company to be used for operational purposes.
Perfect. Next one as well for you. The 5,000 minimum tax applies only if the income that is not remitted to Malta exceeds 35,000 euros, right? Otherwise, the amount of tax that corresponds to your income bracket.
Correct. So basically, if an individual is remitting an amount of 30,000 euros per year in Malta, through the progressive tax rate, that will automatically result in a 5,000 euro tax balance in Malta. If an individual remits less than 30,000 euros to Malta, they would need to top up their tax balance to the 5,000, to the minimum tax. And if anyone remits more than 30,000 euros into Malta, then that will be taxed according to the progressive tax rates in Malta, and it will result in an amount slightly higher than the minimum tax of 5,000 euro. So the minimum tax is applicable to everyone, and obviously one may exceed it if the amount that they remit into Malta on a yearly basis exceeds 30,000.
Perfect. Now, next one, Mark. The applicant is involved in his family's business and his father owns the company. The applicant's father owns a sufficient property and income of 10,000 euros a year. Which is the right program for the applicant to apply? Very difficult to answer this one, to be honest with you, because we will need some more background from the client. If the applicant is a third country national, Mark, if it is from India, for example, he will need to apply for residence in Malta through the GRP in this case, or the MRVP. If the applicant basically is from France or from Europe, situation may be slightly different, but with an income of 10,000 euros a year, it's just basically don't see it. So let's do something. Mark, I will be contact you separately, and we'll speak about this particular thing. Don't worry at all. Thanks very much. Next one, anonymous attendee. Could you briefly illustrate post-Brexit what hoops British citizens have to jump through who were residents not filed in Malta pre-Brexit? When you're saying, I think that here there's just basically a clarification. The UK is still in the European Union. So if you have your resident dom in Malta, it means that you are a resident in Malta, you have your house, you have your domicile, you should have applied for a EU residence, for a residence card as an EU national formally under self-employment or self-sufficient, sorry. If you haven't done it, please contact us and we'll assist you on that. That it is extremely important to do it post-Brexit. So basically nothing much will change. You will still be deemed resident in Malta as far as things are. Then after that, after Brexit, it is when you are going to become a third country national and you will need to attain residency in Malta in order to apply for whichever it is. The GRP will be in that case, or resident dom, or whichever would fit better your situation. I think that answers right, Mark. What do you think? Anything else to add? Yeah.
Nothing to add from my end, no.
Brilliant, excellent. We have a few more. This is also done. How long do you have to hold income offshore before it is considered capital and can be remitted tax-free?
This is not found anywhere within the laws, and no one will really give you that answer. But as general thought that we would advise our clients, we consider to be 24 months to be a correct time to hold the income for it to be considered as capital and remitted tax-free. So you're looking at roughly 2 years of holding that income offshore and for it to be considered as capital. What's important to note over here is that as I mentioned in my throughout the webinar, is that if you're going to be mixing up capital and income within the same account, upon a remittance of foreign income into Malta, the first part of the remittance is considered to be income by the Commissioner of Revenue and therefore taxable, and any leftover they would then be considered to be capital remitted. So it's very important to make a clear distinction between the capital and income accounts that you hold outside of Malta.
Perfect, excellent. Last three. If you have any other questions, please submit it to Malcolm or to myself. We'll answer. We will schedule a call. That's true, actually. This is already done. And Mark, if the applicant has a company registered in Malta, he's going to tax in Malta, except to pay tax in India. Mark, let's just basically schedule a call and we'll discuss about this, because I think that it entangles with the first questions and your few questions. So don't worry, we'll be in touch with you. And the last one, it is in which bundle of taxes I fall if I work and I am domiciled in Malta, but my partner doesn't, and basically does not pay taxes in another country, single or married rate.
In this case, it would normally be more beneficial for you to be taxed at the single rate, for the reason being that the single rate has a larger free tax bracket. So the bracket at which you pay 0% tax would be of more beneficial use to yourself as an individual.
Perfect, excellent. So I think that that's all for now. We have kept it to 1 hour and 3 minutes, 1 hour actually. So kept it to the schedule. We thank you very much. Thank you, Malcolm, for joining us today. I think that it has been very good. And guys, if you have any questions, please, there you have your email addresses. You can find us in LinkedIn, Skype, WeChat, Telegram, WhatsApp, obviously, or on csbgroup.com. We'll be more than happy to answer all your queries and your questions. So thanks very much, and stay tuned for next week. Cheers.
Thank you.
Thank you very much, Malcolm. Thank you.
Thank you, everyone. Bye-bye.
Yes. Thank you, team. Cheers. Bye-bye.